Hello, I'm Donald Leggett, and welcome to the latest Focus IR CEO interview. I'm joined today by Russell Fryer. He's CEO at Critical Metals, whose stated strategy is to focus on near-term production opportunities which prioritise cash flow. Critical Metals are main market listed and have the ticker CRTM. Their primary asset is the Molulu project, a former copper cobalt mine in the Democratic Republic of Congo. Greetings, Russell.
Greetings, Donald. Thank you for having me.
It's great to have you with us today. Now, let me start by asking about Critical Metals' low CapEx and OPEX brownfield investment strategy. I know that you've got a 70% holding in the former Molulu copper cobalt mine in the DRC. So what's your aim there? Are you going to bring it back into production? Put that whole thing into context for us, please.
Sure. So when we rolled out the Critical Metals strategy, I looked back at my investing history and I said, where have I lost the most amount of money as a hedge fund manager, as a commodities fund manager, as an investment banker? And it's always been on exploration. So when we put Critical Metals and the Critical Metals thesis together, we say we want to minimize any potential losses for investors. So what we've said is whenever we get involved with an asset, we want to have it in production within 12 months or less. And for example, with Molulu, we acquired control of it in September 2022, and we had first direct shipping ore, in this particular case copper ore, production the third week of January 2023, so roughly about 6 months later. We mined it during the rain season. We learned our lessons. We stopped mining and decided to do some geotechnical geophysics work and some IP, and then some drilling. So everything that we do has to be up and running cash flow-wise, production-wise, within 12 months or less. And that allows us to de-risk a lot of the investments that we currently have, Molulu, and also what we're looking at in the future.
Okay. And talking about Molulu, to recommence production at Molulu, you've raised $1.6 million in convertible loan notes. So if you could explain to us in a little bit of detail, if you might, how those funds might be spent.
Sure. So we've announced publicly that we're going to rehabilitate the road. It's a 28-kilometer road, and there's 3 areas that actually need culverts or piping to remediate the water during the rain season. And the idea is to make sure that this road is able to have much more increased traffic usage from the villagers and also from our 40-ton trucks during the rain season. So we will use compactors and graders and bevel at angles and then put layers of stone on it. So it can be used in the rain season, which is really from November to about the end of March or so. The second point is we started an initial 2,000-meter drill program. We've only drilled about 1,000 meters or so, and we need to complete that. And for several reasons. One, once we get our 2,000 meters drilled, which some of these proceeds will be used for, we'll be able to create a block model. And from the block model, we'll be able to create a mine plan. And from the mine plan, we'll be able to decide where to begin production again. But as important, once the 1,000 meters is completed and the 2,000 meters total is looked at, we'll be able to finish our JORC report, which we've actually started writing a few months back. So JORC report's very important for us to get out this year. Production restart's very important. So the use of funds will go towards that. Where I think an exciting part is we're opening up a whole new world of investors, which is we're going to list on the OTCQB. Critical Metals has a satellite office in Greenwich, Connecticut, and we know for the incoming emails and calls that there are investors in both Canada and the U.S. that want to purchase shares but aren't allowed to purchase shares on the London Stock Exchange. So what we've done now is we've put in applications for the OTCQB. They've been accepted, and all we need to do now is make a payment or so, and we'll be able to open up to a continent of about 380 million people, of which 15% or so are active investors on active retail investors.
You're drilling to establish a JORC resource. That makes a lot of sense. What was it? If I could ask, what was the previous copper ore output from Molulu, and what might you be targeting in the future?
So we started our initial goal, publicly announced, was 10,000 tons of copper ore per month. And so you're in ramp-up phase. When we started in the third week of January 2023, we only did about 1,000 tons or so the first month, and then we started ramping up. We ended up really with about 9,000 tons of ore on the pad before we stopped and decided to do the geophysics, geotechnical work, and the depolarization program. We will restart production at about 5,000 tons a month, then do 7,500, and then get to 10,000 in month 3 or so. So it's a graduated production restart once we decide to pull the trigger on restarting production.
And you have an offtake agreement in place for this ore?
Well, interesting. We've had 7 different buyers want our ore. We had an offtake agreement with OEM Metals. I spoke to them last week. They're looking to resume purchases of our ore that's sitting on the pad now once the road gets rehabilitated. They've received 3 truckloads, 3 40-ton trucks of our ore. They're very happy with its performance in its mill. What's interesting to me now, though, is with the copper price sitting at 9,200, 9,300, our margins have actually expanded. So what we've expected to receive 6 months ago, we'll actually receive probably 20 to 25% more just because of the copper price increase over the last month.
Cobalt. Cobalt is a byproduct. Just give us a little bit of detail on if cobalt is significant or less so.
So there's a cobalt area that has 2 open pits where the artisanals were mining cobalt. That's directly south of the current sulfide pit. And we've left that alone now for various reasons. One, we wanted to put our capital into the sulfide pit where we had the high-grade copper intercepts. Number 2, we think that we're going to do an auger drill program before we do any type of diamond drill programming on the area. So although we've done geotechnical samples and soil chem, we actually need to do a bit more drilling. But instead of putting the capital in the cobalt area right now, we really want to focus our capital allocation towards the copper sulfide pit. I am very bullish on cobalt over the medium term. Cobalt's at a low of about $28,000 a ton. And you're starting to see the Indonesians put some cobalt in the market as a co-credit to their nickel production. So I think probably for another 12 months, cobalt prices will be low. But I think towards Q3, Q4 this year, we'll start to work on the cobalt anomaly that we've identified.
Okay, cobalt could be commercial for you mean?
Oh, very much so. And in fact, it's in our plans for the future. We have looked at 5 different processing plants. We announced that the processing plant that we were going to rent and ultimately purchase, those talks have come to termination. We've actually have been speaking to a second plant and had visited there 4 times already. We've sent consultants to visit this plant or so, and it is a cobalt plant with a copper circuit. So cobalt is absolutely in our plans in the DRC in the very near term.
And why is it useful for you to have processing as part of your workflow?
Well, right now what happens is you get roughly anywhere between 30 to 35% of the LME price when you sell ore. And you sell ore to a processing plant. And then the processing plant processes the copper ore, the direct shipping ore, or DSO as the Australians call it in the iron ore industry. They get the upside from the 35% to 95, 100% of the LME price. So there's a big margin of 65% to capture there that we leave on the table. So the idea would be to upgrade our ore on site using a concentrator, truck it, instead of trucking it to OEM Metals or one of our off-takers, we truck it to our own plant, and then turn around and make a copper cathode for export and capture that 60-65% margin that most processing plants capture.
Okay, that sounds very interesting. And is it daft to ask, is there a time frame for the discussions with the new processing plant?
Well, so I'm going to meet with them in 2 weeks when I'm down in the Congo. The U.S. government has been very supportive in our attempts in our process to purchase these plants or a plant. In fact, about 4 hours from now, we have a meeting with the DFC in terms of financing, and I can get into that a bit later in the interview if you'd like. But we have immense support locally to try to purchase one of these plants that is on care and maintenance. All of the plants that we've visited, except for the Castro plant, are on care and maintenance. And we think that within probably 9 months of an acquisition, we could be processing not only copper ore, but also cobalt ore.
And if it's on care and maintenance at the moment, to what extent is there CapEx involvement in getting it up and running again?
Well, the prices for plants vary from anywhere between $2 million to $10 million. In the example of the Castro plant, which is terminated, it was about 6 million or so, 8 million purchase price, and another about $1 million to refurbish some of the items that I wanted to see refurbished. So roughly, for 10 million or less, you can purchase a processing plant. Now that depends on your feedstock and your throughput capacities, but that would suit our needs quite nicely. And as was announced in the RNS this morning, we have a term sheet in hand from a finance institution that the U.S. government has guaranteed for $11 million. So we would be able to purchase a plant, get it operational with this type of financing. We actually have a second term sheet that we're waiting on from a different institution, and I don't know what it looks like, so I haven't put it in the RNS. And then again, as I mentioned, we've got the meeting today in about 4 or 5 hours with the DFC in terms of also looking at grants for the DRC, for Molulu.
So let's pull back for those people who don't understand about U.S. government support for corporate expansion in the Democratic Republic of Congo. If you could just give us an overview of how that works and how it's actually going to benefit you.
Well, the U.S. government has decided that they want to support companies that are processing, mining, have anything to do in terms of logistics in the critical metals chain. For example, the recent success of the Loboto corridor was funded by U.S. government loans. Now, those will get repaid, but you've seen one of the Kolwezi copper producers actually use the Loboto corridor, which shaves off about 2 weeks from mine to port. And so that's obviously time is money. So instead of sending copper or cobalt out to the east side of Africa, Loboto corridor, the U.S. government project in this case, sends it out the west side, and it gets up to Europe or North America much quicker. Now, the U.S. government has various programs, of which we've applied for 3, where they will provide either low-priced loans. When I say low-priced, the interest rates are single digits. And if you think about single-digit risk in Africa, that is incredible. They will also, via the DFC, take an equity stake, depending on the size of the company, or there are grants for bankable feasibility studies and such, which we've applied for. And so we're in all 3 avenues of this type of financing. One of the other interesting points is they provide very, very reasonable financing if you purchase U.S. manufactured goods. For example, Caterpillar equipment at the mine. So if we wanted excavators and if we wanted trucks and we wanted graders and such that were made by Caterpillar, which is a U.S. firm, they give us loans at very reasonable prices and interest rates for that type of acquisitions.
Do you know, that's absolutely fascinating, Russell. I didn't know all that. So thank you very much indeed. Now, let's move on to Gordon Thompson. He's joining the board as a non-exec director, and he's going to chair the technical committee. So what experience does Gordon bring? And I understand he's a bit of a big hitter. So what does he bring to the table?
Gordon's background is incredible, and I haven't. The market hasn't woken up really to his experience in the Congo. So I met Gordon in late 2009, 2008, 2009 in the Congo, where he was putting together a copper cobalt plant for Boss Mining and really building it from scratch. And as we know, Boss Mining ended up getting sold to ENRC, which is now ERG. Back then, it was a listed London company. There were problems at a company called Kapoy. He went in and sorted out the problems. SEK owns it, which is a Chinese firm now. But what was his most recent DRC excursions and experiences with a massive multinational company called Chemoff, which is Chemicals of Africa. And Chemoff's up for sale now. Everybody knows there's short form bidders. He put together and installed, designed, ran the key plants at Chemoff, and was there for many years and decided he wanted to go back to South Africa and have a life of luxury. We managed to coax him out of quote-unquote hiatus, and I'm seeing Gordon in 2 weeks in the DRC, and we're going to go to Molulu, which he's already been to. Gordon's also been to one of the processing plants that we have just spoken about, and Gordon and I and one of the mine engineers will be visiting a concentrator that we're looking to potentially purchase to put on the mine. And really what a concentrator does is it takes 1% ore and it upgrades it, right? It improves it. It gets rid of the gangue, gets rid of the dirt and the waste. And so you're transporting payable ore instead of ore plus waste. And so Gordon and I are going to be investigating concentrators in the Congo while we're there in the next few weeks. He's a 9 out of 10. He'd be a 10 out of 10 if he was a Congolese. But in terms of his experience, in terms of his knowledge about copper seams and cobalt seams in the Congo, and how to navigate not only the geological issues, but also the political issues, Gordon Thompson's fantastic.
Okay, DRC, what kind of jurisdiction is the DRC? With Gordon on board, Sam says you've got someone who can navigate the way around the place.
Sure. Well, I think DRC is very underappreciated. And I'll give you an example. We've seen a lot of noise now out of one of the South American countries with regards to censorship and riots and some of the social issues around this South American country. December 20th of 2023, there was a presidential election with a credible competitor, your opposition party. January 19th of this year, the president was inaugurated. No riots, no fighting, very democratic, and the country's moved on, right? So the DRC wants what every African country and probably every developing country wants, which they want to create jobs. They want to have unemployment drop. They want taxation. They want a fair return on investors coming into the country. They don't want to see raw materials, in this particular case, or exported so this processed somewhere else. And so what we try to do is be a good corporate citizen in country. We're a Western firm. We have Western rules and regulations and ethos. And for example, while we were waiting for the rest of the Phase 1 drill program to happen, we built a school. We're discussing building another school and potentially a church in the region, right? And those are feel-good, non-cash flowing type items. But, the DRC is actually a fantastic place to do business. It has it's been mislabeled over the years. Sure, it's had its issues, but there's issues all over the world with various countries that are involved in the mining industry. Not only in Africa, but South America, and North America, and Asia. So if we adhere to our Western standards and we're a good corporate citizen and we're transparent to our business partners who are really our shareholders, I think we'll be successful. And you've seen 2 or 3 very well-known entrepreneurs in Barrick and in Ivanhoe come into the country and say this is the right way to do business as a Western firm, and we're trying to follow their pathway.
Okay. Thank you for that, Russell. What news flow can we expect in the next few months? So we're coming to the end of our interview. If we could wrap things up by telling us what to expect in the next few months from you.
Sure. So the whole market's expecting a road announcement, which will come shortly. The road contract was signed. I just wanted to get the RNS out today in terms of letting the market know that we're well funded now, right? So there's no issues in terms of getting this road up and running. So you'll see some road announcements. You should see some geophysics announcements because we have the geologists doing some mapping, drilling announcements, hopefully announcements in terms of the sale of ore once the road is complete, the offtake announcement, or certainly the ore purchase agreement announcement. I think that's what you'll see in the first, in the remaining part of Q2, which we've just entered. So over the next few months or so. I think the concentrator is a wild card. If this concentrator we find, that will add immense value to the company in terms of taking the 1% ore and upgrading it to 3, 4, 5%. So I'm hoping that we're going to be successful in finding a suitable equipment. I think that you'll see from the PR side, you'll see a lot with regards to the U.S. and Canadian marketing. So new shareholders coming into the story, able to buy on the U.S. market via electronic pipe. So I think we're going to see a lot of news, certainly over Q2 this period.
Okay, my final question to you. If you could give us an investment summary, please, Russell. Why should investors add critical metals, ticker CRTM, why should they add CRTM to the watch list now?
It's pretty simple. I'll give you 3 points. One, we're expecting to restart production in 2024. Very few micro-cap, small-cap companies can be cash flowing in 2024. Number 2, copper price. Our share price normally tracks the copper price. And the copper price is actually, for those that are producing, is helping with expanding margins. So our margins are starting to expand. Number three, we actually have U.S. government support now. They know who we are. The Senator Blumenthal on one of the committees has actually been copying us on some emails that have gone to the U.S. government. So we are looking at innovative funding that is non-dilutive to shareholders. And number four, I think our 5-mine and 5-jurisdiction M&A thesis is still intact. We are speaking to mines in other countries with other other minerals other than copper, cobalt. So we're trying to diversify a bit to give our shareholders, which are really our business partners, some stable EBITDA and ultimately dividends. So that's what's on the cards. We have a lot of targets and goals that were announced at the AGM that we have to hit this year, and I think that shareholders and our business partners should be well rewarded by joining us on this journey.
Russell Fryer, CEO at Critical Metals, thank you very much indeed for joining us today, and we very much look forward to hearing from you again. For more company information and to have access to the company bulletin board, please go to the Critical Metals page on London South East. And meanwhile, do follow us on Twitter. That's @_FocusIR_ and @London South East, or register on London South East YouTube to receive alerts to our next Critical Metals interview. And all that remains for me to say is thank you very much indeed for joining us today.